Hi everyone, welcome to Market Kickoff. It's me, your host, Anne Marie. Where am I? Can't see myself there. Let's go here. There we go. There I am. All right, everybody, welcome. It is the second week of January, and we are, well, bless you for saying that, Timothy. I appreciate that. This is going to be a pretty interesting week, I can tell you that. We've got a lot going on, and so tonight, interestingly enough, the futures are very quiet. Now, where I can find what the futures are doing is by going to Bloomberg, clicking on the futures tab, and it tells us from there what our gaps are going to be. So it looks like maybe a point to the upside in the ES, a couple of points to the upside in the NQ. So things are stabilizing. We're going to go straight through these charts very quickly and then start positioning for ourselves. One of the things that we notice as we start with the E-mini S&P is that we are making higher lows and higher highs still. So dips are still buy zones. Now, the big thing that happened last week is Captain Condor. Well, that didn't happen last week. It happened Christmas week. Captain Condor blew up. So there's a reason that I'm talking about that. If you don't know who Captain Condor is, then just do a little web search. You'll find him. He's a guy that has had to martingale a couple of trades. And the reason I want to talk about this is that we have a tendency to do a version of this when we are trading in the futures intraday. We continue to add and kick the can down the road as we are looking to break even. We'll add to our positions that are going in the wrong direction, and eventually we'll blow our counts up. So this is the latest example of why adding to losers is a terrible idea in general. And in specific to Captain Condor, which everybody was, talking about, hey, he's making tens of millions, people are following him. And the thing that is nothing good lasts forever. And if you're not smart about managing your risk, the market's going to come and wipe you out. And that is yet another example. So I am definitely going to explain the call wall and put wall. Those are based on options, the same kinds of things that Captain Condor would put in position. But what these do, what the call wall and the put wall do, is go to the option chains and they look down the chains and they find out where the most people have aggregated at what strikes. And so for us in the ES, the call wall today is 70.50. Last week it was 70.15 midweek, but when we were together last week, Sunday, it was 70.50. The put wall has risen. It's now 6,800. And so what we see is a very likely move upward. Now, a lot of folks are thinking what we are entering is a topping formation of sorts. But when your brain thinks, hey, this is a topping formation, what you have a tendency to do is try to short the highs. And when that's not really what's happening, you end up getting smashed. And it's a grind to the upside. Hoop called it a zombie rally for Friday. But that zombie rally is generally caused by sellers trying to sell the top and then having to buy to cover, right? Just found out that the Shanghai Exchange got a 64-ton order for silver and they only had 1 ton in the vaults. Okay, so number one, don't believe anything that you read unless it's verified by at least 3 different sources, because in the clickbait environment that we have in social media, ideas are picked up, somebody says something that sounds amazing, and then it gets propagated straight through the web. And what is it that Mark Twain said? A lie can go around, or maybe it was Stalin. I don't know. Maybe it was Lenin. A lie can go around the world twice before the truth gets its shoes on. And so just remember that sort of thing. There's a lot of stuff going on in the silver market. It is very oversubscribed. Yes, there are a lot more contracts than there are actual ingots of silver to put out. But the bottom line is this. COMEX can simply say, or the Shanghai Exchange or everywhere, we'll get you your stuff, but we get to tell you when we're going to give it to you, right? So even if that's true, they can just go, hey, we'll get it to you when we get it to you. And they can do nothing about that. So just remember, don't believe anything that you read unless you've seen it verified from reputable sources several times over. Because I can't even tell you the madness that I've been reading on social media, and it is so far from the truth that it's just bananas. So I know I got way off track. That is me just running into whatever. So here we go. The call wall tells us how many people have positioned at that strike, and they have sold that contract in general. Why? They collect a premium, so price can do anything around here. It can go up, it can go down, it can do nothing. They'll still make their money. Same thing on the put wall. 6,800 is where it's sitting beginning the week. And so what we're going to see is that price action, as long as it stays in between this area for the entire week, the guys who have sold the puts, and I mean guys in an androgynous sense, I don't mean just men. Guys is, I spent my summers in New Jersey with my grandmother. Guys means everybody. So as long as we stay in between here, the folks who have sold the puts and sold the calls are going to make money. And that's really a beautiful way in the option space to make money. Now, here's what I notice. Look at this 4-hour chart. Look, these bars below here, the light gray bars are buying bars. And notice, day after day, after day, after day, after day, what are we seeing? Higher volumes of buying. What does this tell you? We're not falling off a cliff anytime soon. Not remotely. So dips are going to be buy zones. In general, right? That's the supposition that we make when we take a look at a chart and we say, oh, I'm moving higher on more volume. It means that likely means continuation. Now, does that mean go out and buy the high? No, it doesn't. Why? Because notice what happens every time we get to a new high. It hangs out, maybe it pops higher for a little bit, and then it rolls right over and then tests a new support. So that's what we're seeing. We're seeing tests of support and then the breakout. What are those levels into the regions? What I did was I went back to the 15-minute charts and I said, show me where these high volume formations are sitting. And we've got a support floor that sits near 69.76. That's going to be a great leg to watch, 69.76 as a pullback event. The next thing we want to look at is, you can use Fibonacci for this. You can take your 4-hour chart, your 4-hour candle, and just draw Fibonacci on it and look for that 50% range. It's at 69.85. And so between 69.76 and 69.85 is going to make a great sweet spot for a buy zone, in my opinion. Now, price action is likely going to gap up a couple of points. We want to watch it look to the high at 70.17 or so, and then potentially fade, come into that 50% level, and then give us a buy zone. Well, couldn't I short it? Absolutely, you could short it. You can do anything that you like, right? But that's what we're staring down. Let's go to the NQ. That looks like a topping event, but what do we see? In general, higher lows. This pink is the anchored VWAP from the last Fed release, from the last Fed meeting for the interest rates. So that's holding the floor, and look at the volume. High, higher high, higher high, higher high, higher high in terms of volume. Volume's increasing, prices are pulling into support and bouncing. So what do we want to watch for? A pullback into support. This one is a little trickier, and here's why. It's trickier because we've got a sideways event, and this is a topping space, and we have technical divergence. So it's likely that price action actually comes to the bottom of this candlestick. So it might not be a bad idea to consider a short that begins up top here at the loss of the close of the candlestick and works its way down into these edges. So this is the one that I'm looking for. I don't normally trade the NQ anymore, but this one's setting up for a pretty nice reversal event. So I'm going to be watching that, in the next 3-4 minutes. The next one we want to look at, of course, is micro Bitcoin. This one had a really nice run up. Uh-oh, I did that the wrong way. I had the coordinates, but 94 is what we're looking at there. The call walls moved up and the put walls moved up here. The traders need to get above the put wall because remember, the call wall says the traders have sold the calls at 94,000. That means as long as it sits below, they're making money. They've also sold the 92 on the put side. That means they have to get up above 92 so that they can still make money. Right now, the folks who have sold this put are a little bit underwater. So they're going to try and lift that, of course. We'll see if they get it done or not in terms of motion. But we do have a little bit of a bottoming formation, and we had a wick move off of here. So my suspicion is that's likely a target zone right here on a bounce into 91,600, right? Pullbacks into 90,000. If we get something like that, might make a nice long into 91,000. But this is, I don't like trading in formations that look like this at all. I really, really don't. Let's look at oil. So we had a big deal. We had a big deal, big conversations. Chevron looking to do things that Exxon does not want to do. Exxon called Venezuela uninvestable. we're going to see a lot of action in oil this week. It's fairly sideways, but I would not be surprised to see oil finally start to move to the upside. I am looking for dips to be buys at this juncture. So this one's just started. We have a volume event here, so it's battling at the base of that volume event. What we want to do is see it hold. So if per happenstance, actually this is a pretty good shot right here. If I buy it at 58.90, let's see if it comes in there. I think it's a fair buy. I'm not really sure it's going to allow me to get that, but dips are going to be buys here because a lot of people are thinking, oh, we're going to get all this stuff out of Venezuela, and these, I mean, they had a reckoning. They really, really did. It was not something that our commander-in-chief wanted to hear, not remotely. So let's take a look at, let's look at silver. The call wall in silver. Now, we just had someone say, hey, we just heard this about Shanghai XYZ, and yes, that's a pretty piece of dramatic news. Dips are still buys here. The line in the sand for me is that as long as it's above 75, there's going to be more buying on the dips. We can look across time and see this big, take a look at this trend. This is quite a trend line, folks. Look at that. And it's holding it pretty rock solid. Now, does that beg the question that says, hey, maybe we come down into 75, 76 again? Potentially. That's easily something that could happen. Is we gapped up and now it looks like we're going to fill that gap. Dips are clearly buys. We'd want to look at this on a very tight cycle. There are a lot more buying candles with size than selling candles. A lot of things saying that dip buying is still on the horizon here. But as it gets up to the top, we see that buying sort of tip. And folks go, all right, that's it. I'm going to see if I can work it down into my heavy congestion event, because really they're accumulating in this entire region. This whole region looks like choppy, noisy accumulation all the way down to 70, right? $70 looks like where they're generally accumulating. I'm going to put that right here so I can see it on the big chart. So I would not be surprised to see a little bit of fade here in silver, and we're seeing that. Then let's finally go to gold. This is very interesting. So the put wall and the call wall are only about 20 points apart from each other, 25 points to be exact, and that is most unusual. That's unusual that the call and the put wall are so tight to each other. I see price action trying to carve out maybe 2 or 3 days of sideways pressure here before it potentially heads to the north. As you can see from watching any news, we're in a news cycle that is a war cycle. It's very important that we keep our eyes on what's happening in Iran. The government simply cannot manage what's happening with their people who are revolting because they're like, we're done. We are very tired of you and we're going to do something about it. And they continue to do it, right? It's like 3 weeks of protests. So that's kind of a big deal. We definitely need to watch out for that. Certainly something that's very, very important. And it could make these metals just really grind much, much higher. So last thing I want to talk about in terms of these things before we move Nat gas has been just rolling off a cliff the last several days. I would expect we start a bounce event here simply because we are not going to be awash in oil. Venezuela is not going to give us all kinds of X, Y, or Z. It's just not what we're looking at. Now, people are saying, hey, listen, it's La Nina that is giving us these mild winters and blah, 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 blah. Now, it is true that La Nina does have a gigantic impact, but the bigger impact right now is the solar minimum, which has these volatile pockets of extreme cold and then mild events. So we're going to see a lot of things happen. We're going to see a lot of things happen with nat gas in the near term. But if nat gas holds above the region that it's breaking out from right now, and that's 3.2 or so, it should get back up into 350 and try to stabilize. I suspect they're going to try and stabilize each other. All right, so let's get back to the floorboards here, and let's go to a 15-minute candle and see what we've got. Our big candlestick of last night, on Friday, this is where we came in, and we are underneath that. We're trying to get to a floor of support here. This is an upward formation, but now we are underneath a moving average, looking a little bit like a sell zone to me in terms of a general fade. So I am willing to put a sell order at 7,003, which is the low of the big volume candle from Friday that ends the day. So I'm going to wait for the bounce, let it come into that 7,003, and then we'll see how that one goes for us. The next one, NQ. Yes, daggone it. So, as I mentioned, I felt like this was a fairly nice short into its motion. So I'm gonna do the same thing. Right at the close of that area. I don't want to chase it. I want it to come back, test the door, and make sure that prices can't get through. If they can, I'll shut it off, I'll let it fill, and then we'll see what's going on from that perspective. All right, let's see about some questions. Oh, look at this. So nice, everybody. Okay, will gold move? Let's see. Yeah, we should sell. There's a massive 1,049 buy contracts at 96.50 on the ES. That's pretty interesting. 96.50. Let's go back here and see if they pulled that order. Well, here it is. They let it, I don't know if it failed, but that certainly is bouncing off of that edge, right? This wick right here is going to be pretty important. My hope is that it gives a reflexive bounce that will allow this short to open up. But that is a big number. I have to write that one down because that's a big number to see on Hang on a second. My desk is still in relative disarray since I've just returned. I'm still a zombie, literally. I can't even tell you. Okay. So 96.50. I'll do that. 1,000 lot. Okay. Okay, so let's take a peek. Watching it come back. Let's go to the NQ now. See if that's also a reflexive bounce. Superb. We're seeing all the reflexive bounces. Let's take a look at Bitcoin. This one actually has really surprised me, folks. You know, I did not think this chart had the participants that were willing to say, I'm definitely going to buy down here. I just didn't see it at all. I did not. A couple of macro guys this week said something about liquidity being at the max threshold, and then from here it would wind in. I don't know if I believe that. Everybody's got their right to an opinion, of course. I just don't buy that one. And so if liquidity is going to dry up, Bitcoin is going to show us that. And the way it's going to show us that is by losing 90,000. If it loses 90,000, we're in trouble. Right now, they're just accumulating inventory, right? Why do I always use this term, accumulating inventory? Listen, if we want to sell something, we first have to own it, right? Unless we sell it beforehand, which gives us a commitment to buy it later. Now, a lot of people go, why is it that short squeezes drive the market up? See, if you're a buyer and you're not in the market, and I'm a seller, I've already sold, and we're both looking at price action move to the north, who has the obligation and the desire to buy more than the buyer? It would be the seller who's losing money with every single uptick. So inside of every seller is an implied buyer if that person has sold to enter the market. Does that make sense? That's why we see short squeezes, because those sellers are compelled to buy themselves out of the market because they're upside down in the trade. You or I, who have not sold, let's say we've not sold and we're just looking at the market go up, all we're losing is opportunity cost, not actual dollars disappearing. So when we stare these things down, we have to think about, okay, why is the market continually grinding up when you can clearly see people are trying to short the tops? And it's because the buyers come in, and as price starts to catch hold, the sellers turn around and are compelled to buy so they don't lose more. That's how that mechanic works. Okay, the buy for GC is loaded. How do we get a volume chart? Which kind? Do you want a volume chart that sits on the side, or do you want the volume underneath? You can simply choose volume as an indicator, or you can use volume profile as an indicator. Volume profile puts it up here, and volume puts it down here. So that's how you can get volume. Can you go over gold again? All right, I can do that. So gold's gapping up, as we talked about this, right? We talked about what's going on with gold. I said, hey, listen, we are in a war cycle. That's going to move these up in general. It's going to move these up. And what this is doing is sort of gapping up and moving to the north. So let's talk about how do I figure out what it's doing? Two ways. First thing we're going to do is draw Fibonacci. Actually, we're going to draw two Fibonacci's. First one we're going to draw is the one that has the low of this last wave and the high of the wave. Now look at what happens. It comes in and it holds the 50% area. Also happens to be the put wall. And now it's moving upward. So there is a gamma line that is sitting at 4,546. So as this is moving, my thought is that's where they're chasing it. So now the question becomes, well, can I chase this? So here's the thing. If you're using micro gold, right? If you're using a micro, you can use a couple of these. If you're using the actual gold, what you want to do is the following. You want to look for old resistance. If you're in a micro, you can just buy one and, it'll draw down on you. But the goal is to give yourself enough room that you can move. Now, I don't particularly love that strategy. I like for every strategy to be based on something other than, oh, it's going up. I can't stand waiting around. I'm going long. Yeah, don't. So here's what you can do. Old resistance, new support. So notice two things we can see. One, price action is still moving to the upside, right? Look at what I use, Chandy Momentum Oscillator, right? And I use it, I think it's a 14. Let's see what I do. Let's look at my settings. My inputs, 14, right? All I look for is, am I above the zero line or am I below the zero line? I'm above the zero line. Next thing I look for is, well, am I above the moving average or am I below the moving average? And is that average moving upside? Everything here says, listen, dips are buy zones. Old resistance, new support, 45.32. Could you chase this up here? Absolutely, right? So if I said, hey, I'm buying it,
open.
Right? If I go, I'm buying it, if I actually try to validate my risk event, my minimum risk is going to be $370 here. So do I like this move? I do not. I do not. Now, I am taking this to simply share with you a way that you can trade that I would not advise. Buying the top of anything in this market has been a bad idea in general. Now, if you're staring this chart down and you're saying, well, wait a second, Anne-Marie, I see. I'm moving up. I've got higher lows and higher highs. My momentum is up on the top. I've got my moving average up there. I want to buy it. Listen, you can do whatever you like. The question is, if you do whatever you like, will you be able to come back and trade tomorrow after having a whole day of doing whatever you like? And so when we were on group coaching the other day, Hoke said something really good. He said, the worst thing in the world that can happen to you is that you break your process and the trade goes well for you. Because then you think, must be me. I'm the stuff, right? So as I'm looking at this, I go, ooh, nice breakout, right? I don't think it's going to go all the way up there, although it's the next gamma line is 45.46, and my target is at 45.44. But this is your choice. So I can look at this and go, oh man, this is great. It looks fantastic until it breaks down, right? So right now you can stare at it and go, that looks okay. For me, this is the kind of trade that I don't like, simply because I bought a high, and what I am seeing with all the new highs that get made in gold, they have a tendency to retrace. Now, the only reason in the world that I would take this one up into this space is because I see a gamma line that is just to the north. That being said, I don't like this trade, so I'm just going to get out of it, right? I would have wished that it would come back down and hit my stop so that I could say to you, hey, don't do that. But if you're scalping and you're looking at a 1-minute chart and you're staring it down, you can absolutely try that. The question is this: where do you put your stop in a space like that, right? If you start looking at a 1-minute chart and you buy the high because you go, okay, I'm above my moving average, I have high, low, higher low, I should make a higher high. As long as I stay above my moving average and my momentum is high, I should be in good shape. But where do you put your stop? And how far does that run? So already, right, it's a good thing that I went out there because it's coming back into the original breakout spot. What's the moral of my story here? The moral of my story is, if you don't manage your risk well, you're going to end up in a rough spot in the charts. And so ideally, if you say to yourself, I'm chasing this, one of the best things you can do is collapse down into a 30-second or a 1-minute, which, makes me break out in hives just even thinking about it. But if you do that, at least you can go, okay, here's where they collected inventory over the last 6 minutes. I can see that box. So I know that if I buy out of the break of that box, the bottom of that box becomes my stop. That's a very, very easy space to do that. Now, if you want to know where it's going, just double the size of the box above you. And you can see that, right? And if it moves again, you double the size of that box one more time. So here's what's super interesting. When you identify where inventory has been accumulating and it breaks out, notice it breaks out, retests that event, and then runs, it's going to run right into that gamma line, which is right there, well above the call wall. But notice how uniform the price action is when you look at a chart and you can see, okay, I'm accumulating. And what does accumulating mean? I buy and I stop buying up here. Or traders sell and they stop selling down here. It's literally the range of price action that you're seeing in the chart. It's a beautiful way to scalp, but as soon as it breaks your level, you have to go, bye-bye. I'll see you later. You cannot hang out, right? That's one of the things that people who are trying to scalp, they end up adding to losing positions when the scalp is telling them that the trade is over. But they're busy thinking, oh, if it keeps going, then I'll X, Y, or Z. So that's a really good way to find uniform accumulation. When you see something like this, that's not really uniform. The accumulation there is pretty choppy. This accumulation that occurred when the market opened just a little bit ago, you can see they really are buying the old resistance that looks like new support. And again, if you want to know where the top of that is, just clone it. And if you get to the top of the box, Just put it up there and look at where they're battling to stop. It's pretty amazing, folks. It's absolutely beautiful how these measured moves can be textbook for you if the chart is behaving properly. Now, if the chart's behaving like it's been, sniffing glue all afternoon, we're going to have a problem. But when it's behaving normally like this, it's going to be great. All right. What do I prefer to trade nowadays? Anything that doesn't give me a panic attack, frankly. I just look for uniformity where folks are saying, hey, this is what's happening. And if everyone's in agreement, then I'm okay with that. Really, I'm just looking for people to be normal, to not look like they've been on crack for a week, right? Straight. And silver has done that a couple times. The NQ does that almost every day. So I really try to find things that just have mechanical flow, that I can look at a measured move and go, oh, all right, there you are, there you go. Now, some people might go, oh, look, maybe I can short it there. Don't do that. Don't do it. Here's why. If your moving average is up and you are making higher lows and your momentum is above zero, dips or buys. Doesn't mean that breakouts are buys, right? And we were very lucky for this one because this breakout was a buy, but it's not normally a buy without some kind of rotation. Notice, break up, collapse. Break up, collapse. Break up. Yeah, you guessed it. We're going to have some kind of collapse. It's just what happens. It's just what happens. Look at the NQ. I will. Okay. So here we are on this tight framework. Where is what time is this one? Is that our opening? Yes. So our opening candlestick is it's a very big candle, right? Let's measure it. Look at what's happened. We've tried to get above here. Here's the 50% range. That's where I'm looking to sell, right? Right into that box. We have a bottoming formation. Now, if I reversed this Fibonacci, look at that. It does a 1.5 of the 1 minute, and now it's moving to the north. Right? The VWAP, not the VWAP, the momentum oscillator is dancing around zero, so it doesn't have any real strength. The moving averages are down to flat, so trend is sideways. And this pink line above here is the VWAP from the interest rate. So my supposition for price action behavior has not changed. I'm still waiting for the bounce into resistance that gives me a sell zone. Now, you might go, well, don't I have a trade here? Well, let's look at it. Look at the overlap, right? The goal is always, can I find where inventory is accumulating? Can't really see a bunch on the 1 minute. Let's go to a 5 and see if we see something. So here's what we're noticing in this 5. What we're seeing is a box that begins at this old support line, right? That's the top wick. And it goes essentially to the bottom wick, right? So if we stare this down, what we can see is that buyers are trying to come in near the bottom at 25 Folks, I'm so glad I'm going to the eye doctor this week. Blind as a bat. She can't see anything. 25,880 or something like that, right? And so the buyers are trying to come in there. Now notice over here, that's a wick. So you could say, I maybe want to put a buy here at that bottom edge. But I'm not going to do anything else. I'm not getting involved here. Why? Where's my edge? Where have I developed edge here? If I know that everybody's doing one of two things, buying and selling, how do I have edge? Now here, I know something really definitive. If they don't buy here, chances are they're going to hit that low. And so I'm going to have my sell stop sitting right there. If this comes in and buys, great. And it bounces, great. I think it'll come up right into this edge. If it loses this edge here, it essentially means, we're going to see about fading below. And we will head into these next levels down at the -2 on that Fibonacci. But that's my overall space, right? That's the overall space. Let's see what we are asking here. Whoa, I missed a bunch. We have options expiration Friday. 100 tick chart next to the 1 minute for scalping. Great. Gamma lines are secondary lines. Okay, so a call wall and a put wall is also called a gamma wall. So a gamma wall is just measuring where these folks are sitting in the option chains. So the words are used interchangeably. You just get more color from saying a call wall or a put wall rather than a gamma wall. You don't have any idea whether it's a call or a put line in the sand. It's just a gamma line. So when the market's on crack, that's when I do crack. Okay, you know what? And you have a perfect name for making that commentary. Reckless. That's absolutely perfect. I always have panic attacks. Hey, listen, trading can make you nervous, right? Especially if you want to do the right thing. It can really make you nervous. But at some point, what you have to do is say, my theory is that this is very likely to happen based on what everybody's been doing lately. And so if you sit there and you go, I think I'm going to look at the near past and say, it makes sense that might be the near future. Near past and near future are highly correlated. So if you look at things like that and you just realize, hey, I'm going to take trades sometimes and I'm going to lose. It just is what it is. Once you get accustomed to, I could take a trade and I could lose, then it becomes easier to stomach. Now, what a lot of us do is we think, man, I want to take this trade and I don't want to lose because I want to make money. And we stop thinking about process. We only think about profit. And so if you want to take a look across every single market wizard, every turtle trader, every real guru out there, you're going to see that they are so highly reliant on process and risk controls that they know what's going on. and they know how to balance themselves, which is what this guy, Captain Condor, did not do, right? There are a lot of guys that, there are a lot of big names that when we had the GFC in '06, they were doing that. They were rolling, hey, let's just keep rolling it. Let's just keep rolling it. Sometimes they added more, sometimes they didn't. But that keep rolling, rolling, rolling. When a market is in free fall, you are never going to have enough money. Or if it's in parabolic expansion, you are never going to have enough money to keep pace with it. You just simply are not. There might be somebody out there with that, but for us regular Joes that are working with, accounts that are not 100 million, things come to roost. And so that's really that key thing why I started it off today, that key remembering of let the market come to you. For me, I used to have so much trouble because I'm dreadfully impatient. And so I would say to myself, man, I am waiting for price to come back and come back and come back. And guess what? It wouldn't come back. And I would wait and wait and wait. And then I would finally go, I don't care, I'm getting in. And right when I get in, the market would either collapse or move up into the area that I wanted it to be in. And then I would be right or wrong. But when I'm jumping ahead, literally all I'm doing is expanding my risk. And listen, the way I expanded my risk in my early days, I literally lost millions of dollars. I still have PTSD from it. And that's almost 20 years ago. It was, I would not wish that on my worst enemy. I wouldn't wish that on anybody, frankly, but definitely not on my worst enemy. It's just so painful. And learning to recover from that, there's so much emotional damage. And so when you are trading in these accounts that, listen, the greatest opportunities that we have right now in a place like Topstep are things we have never experienced in all of trading. Truly, we are sitting at a cusp of actually giving the normal, everyday Joe a chance to bootstrap their way into a next economic demographic. The problem is the skills required to do that, they take development. You can't just come in and go, woohoo, I got it. It doesn't matter. It doesn't matter if you were a champion athlete. It doesn't matter if you were the top of your game in another occupation. None of it matters because the market is its own unique game. And interestingly, because it has to do with money, it isolates and amplifies everything wrong with our mindset around money. It amplifies poverty consciousness. It amplifies greed. It amplifies fear of loss. Amplifies everything. And when that stuff gets amplified, easy way to lose. Easy way to lose. All right. What do we... 38. Okay, so what do we got? Crude oil is interesting. Let's see. You have your worst enemy drink raw milk. Now, come on. Gabe and I, we love the raw milk. It's good for you. It really is. Listen, oil's going to scare people out of their britches in the next little bit. there are way too many people on the wrong side of the boat here. Or I should say on the short side of the boat, way too many people. I am going to suggest that time and chance are going to really, they're going to really upset the apple cart for oil traders over the next 2 weeks. I would not be surprised to see this thing go parabolic to the upside. Truly. A few things have to go further, and then everybody's got the stomach what actually is happening in this space with Venezuela. I mean, that place is a dumpster fire, and it takes 10, 15 years to get machinery and mechanics ready to go there. And, you know, I just don't see it. But that's neither here nor there. We can't do anything about that. But it does look pretty good. Now, here's the question. Here we are sitting. Here's a 5-minute chart. You can see they've been accumulating. Let's take a look at this. Pretty far from the moving average. That's number one. But momentum is high and they're accumulating. So what do? You look at the box and you go, okay, I see old support, old resistance being new support. I have a breakout above here. I had sellers all the way at the top there. So what might we want to do in a formation like this? How do we trade something like this? My thought is the following. What does momentum tell us? It's upside. What does trend tell us? It's upside. So let's go a little higher to the higher time frames and see what we've got going on, right? Now we've got a high and then a lower high. But we have a pretty good move from a momentum perspective, right? I suspect these are the folks who've said, you know, we're going to do X, Y, or Z with oil, and now they're like, uh-oh, maybe not, right? So they're unwinding their short because they're thinking, oh, Venezuela is not going to be able to give us X, Y, Z, so we're not going to be awash in oil, so I better get out of the trade. Remember, we've got backwardation. That means the forward contracts are cheaper, which is unusual, than the present contract here. And so there's still a lot of negative pressure sitting here in the market. I don't think chasing the longs are the way to go. Now, that being said, if you're staring down a 1-minute chart and all of a sudden they start going boom, 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 you can definitely chase it. You just need to watch where your risk is. So in this pocket, my thought is, you know, unless you're scalping yourself to the high here, I'm not going to trade this. This has got pressure pulling it down here. It's got a lower high. Yes, that's old resistance, new support. But I don't have anything that says absolutely, here we go, right? Now, I like my limit order down here. I like it a lot. If it comes down here, I'm going to let it fill in the overnight. But as it sits, I don't want to take it long here. I don't, because I know how many people are already short, and I know they're not breaking above the high of 11:30 on Friday. So I'll wait, right? It's in range and in value. And so what Hogue tells us to do when a chart is in range and in value is wait for better opportunities. So that's what I'm going to do also. How can you follow me? Hey, listen, go to the Topstep X Discord. I'm in there. I'm in there, Coach Anne Marie. I'm in the VIP pit. I'm in the strategy lab. You can find me there. I also do a morning video every day that puts all the levels up. And, you can look at my YouTube channel. Just look up Anne-Marie Trades or Anne-Marie Band. Or, I never introduce myself. I'm so bad at doing that. I have to do that better. Yeah. Thanks, Bruno. Thank you so much. Let's see. They're only producing 1 million. Yeah. Oh, what do we got here? Yeah, it's a mess there, folks. It's a mess. It's been a mess for 30 years. It's a sad state. I mean, sad state. Can you put the link to your YouTube channel in the chat? How about this? How about you go to the Discord for Topstep Discord, which I highly recommend. First of all, there are tons of funded traders in there that talk about strategies all day long. Some of them are very wonderful to answer your questions. And you'll get, thanks, Bruno. You'll get all kinds of things there. And, you'll see the videos when they pop up. I'll propagate them in there for you. Is Dakota doing slow markets tonight? I sure hope so. Because, he always packs an amazing punch. I love watching Dakota. I love watching Dakota. And Bruno's always taking care of us. So, all right. There we go. Don't go into the indices room. It's horrible. All right. Can I go over nat gas? All right. That'll be the last thing we do. So, see the big gap up. Look at this gigantic gap up. Now, there is a theory that gaps fill. But my general impression is that gaps fill sometimes. So here's what I would like to see. This edge right here of resistance is $3.30. The trend is lower, but the candlesticks are now above the trend. Okay? The highest volume candlestick of Friday was at 7 a.m. Eastern. Now, I haven't done this, but I love to anchor VWAPs at these very high volume candles. So notice I anchor a VWAP at that high volume candle and we're underneath it. Now here's the next highest volume candle. And so you can also do that, right? So what we can actually see is that we are under one level and above another. So essentially we're trapped in the middle. This implies to me that there is very likely a gap fill on the horizon. I just felt like my static intonations there made me sound like Christopher Walken. So, which he makes me laugh. He could be talking about the most horrible thing and I would burst out laughing because that guy is just so funny to me. He's so incredibly weird, but hilarious. But I digress. So what I would say is assume that the gap might fill. Now, how do you want to do this? Do you want to trade that gap? So here's what you look for. Just like I mentioned, where are they accumulating inventory in the recent time? They're accumulating inventory. You draw a box around it. Between 325, and 326.4. So you look at that and you go, okay, I've got a moving average that's up. My momentum oscillator is above zero, but not great. I'm holding to move it to my moving average. So here's what I have to do. In order to take a short, I would have to watch it break, test the next level of support, have it bounce, and fail to get back into this box. If it does that, I can take a short. As it sits here, I'm holding the moving average, the longer moving average. They're accumulating here. My momentum is above zero, so I could legitimately say, if I get above, here's old support, new resistance. If I get above 326.7, 3.267, I can go long. So you literally can have a stop buy up there if that is something that you want to do. But that's how you measure it, because that accumulation tells you, okay, we're priming for a move. Everybody has agreed that after this low, we're hanging on right here. So now we have a new battle ensued. Let's accumulate inventory and let's see if we can distribute higher at a profit or distribute lower at a discount. And that's the way I would structure this trade. But because I have a moving average that is moving up, because I have momentum, whoa, that just slipped down below zero, just like a flash. But the trend is always master and commander. So you let it fail and you let the bounce occur. And if the bounce does not come into play, then you've got yourself a rotation that will lead you into filling the gap. And so we've got two different anchored VWAPs here that we saw from that earlier space. I don't understand why that's in between like that, because the anchored VWAP actually shows that edge to be 3.185. Hopefully that makes sense. Not now, but it would be great sometime if you could figure out a way for us to see the price scale. You still can't see my price scale. That's crazy. Let's see. I need to figure that out. Yes. Maybe I'll put price on the left next time. That might do the trick, right? Yeah. We'll do that. I'll work on that. I thought I had fixed that. Shucks. I see it now on the screen. I see that there. All right. Any last questions? What did I miss out on that was funny in here? All right, everybody. Thank you, Bruno. You're the best. Appreciate you so much. Thank you so much. And to each of you, hey, listen, I know it's a playoff night and you're here. And how awesome is that? I love it. I love it. You're putting things that are going to make you better, give you a leg up in the world. And I'm glad to be part of it. Thanks so much. Hit the like button for me if you're so inclined. And look for my video in the morning. We'll put up all the new levels. I think gamma flows would be shifted. And we will just chit chat about exciting things in the morning. Stay alert. Trade small or not at all. And I will see you all soon. Thank you so, so much. Take care, everybody.